This is Trade Till You Lose training video, and it's placing stops and risk percentage levels. Now, first off, you're on the euro dollar chart. Now, we're on a 4-hour chart. Right, now I'm going to go run through an example of lottage. Now, first off, as you can see, I've got a trade running on the pound dollar. Okay, I've waited for the issues of Brexit to calm down and the vote and everything else. So got in at 128.85 on a small signal, and my stop loss is 127.85. Okay, so 128.85, stop loss 127.85, 100 pips less. And of course, I've got no take profit because I'm going to let the price ride up. Now, the current price is 129 on there. All right, so I'm about 20 pips in profit. Now, looking on the euro dollar right now, again, the most liquid pair in the world. This is why we always have euro dollar as our template. Euro dollar is the most, the pair I trade the most, I'd like to say, and is the most liquid pair in the world. So it's probably one of the safest to trade, actually. Now let's go through placing stops to start with. And I'm going to use, right here, I'm going to use euro dollar as an example. Now, say we had gone short here. Okay, we'd gone and we'd gone short here on this red candle before it, a solid red candle before it right here, and then we had a red candle then appear after it with a red arrow. So that's confirmation. On this arrow here is confirmation. Okay, I'll just highlight that sort of yellow there. That's our short because we've got a nice big red candle before it. That was not confirmation. That was just one candle, but it took out 3 blues. So it's a strong candle. It's vehement. It's a heavy candle with a full body. And then we had a red arrow on a red candle the day after. So that's a good setup there. Then we jollied around, we came off and came back up and then sold off. But say we'd shorted here, pretty much there, okay, on that candle there, with a yellow and the black just crossed there. Let me just look at what level that is. That level pretty much is around 115.21, 115.20. Okay, we can actually see it stated here, 115.19. That's just around there, 115.19. So let's say if we're selling, we want to put our stop loss higher. So if we put our stop loss above here at 116.20, all the way up here, I can't even get it off the chart because it only goes up to 115.70. But let's just say it would be all the way up here, okay, at 116.20. Now, when we'd sold here, okay, the market came off, rallied back slightly, only back up to 115.30, 115.40. That's not enough to stop us out, okay? That's not enough to stop us out because our stop loss was at 116.20, all right? Our stop loss was at, now that's not enough to stop us out because our stop loss is at 116.20 all the way up here. So 115.30, 115.40 is going to cause us no problems. Then we sold off all the way down to here, back up again, but back up just slightly. We're in those waves. We're selling off in waves, remember. The market just doesn't always fall in a straight line. It sells off in waves, comes back, dead cat bounce, back off again, then consolidates. And then on this way down, this is when you can then lower your stop loss. Okay, so when we're, as we say, 100 pips in profit, now 100 pips in profit from 115.20 would be 114.20, wouldn't it? So 114.20 would be this level here. We only touched 114.20 in and around this level here, right here. This is when we touched 114.20, around about here. That was that level there. Let's just span that there. 114.20 was there. So that is when we would bring this stop loss up here at 116.20 down to 115.20. There, which matches up with our entry, doesn't it? It matches up with our entry from there to there. Okay, just put a line there. Well, that pretty much matches up. So this original entry right here at 115.20, the market sold off, comes back, sold off, all the way down to 114.20. We're 100 pips in profit. So then our stop loss up here, original stop loss of 116.20, can be brought all the way down to 115.20. And then the market then continues to sell off and then we wait for the next opportunity to bring our stop loss down to this level. So we might have to wait now a little bit longer for the market to sell off more until we bring our stop loss down again, keep following the market, okay? And then we keep lowering it and following the market price as much as we can. And that is that. Now, very quickly, risk percentage levels. Now, let me go on to the pound dollar chart, okay? Let me go on to the pound dollar chart here. On the daily chart, let's look at the daily. Now I got in here just a few days ago with a nice pump up here around about this level. We had a blue arrow after a blue candle, so I got in, okay? I got in. Stop losses were in play. Let's take a look at the 4 hour on pound dollar. I'm going to zoom in a little bit more, and you can see some arrows here. We've got a couple of arrows here. This red has been cancelled out by this blue. So we're still long. We're still looking good. This is a 4 hour chart, okay? Now, this is just after the Brexit vote and everything else with that nice swoop lower just after the Brexit vote. Okay, nice swoop lower, and now higher, and we carry on higher. So yeah, I'm in here. So right now I entered at this blue line level. So as you can see, my entry is at 128.85 there. Okay, going across. So market is higher at the moment. It's up here at 129.07. Okay, so I'm about 22 pips in profit. Now my stop loss is down here, the dotted red line right here. Okay, so that's 100 pips away from here to here. That's 100 pips. 100 pips right there. From here to here, 100 pips. Now, I'm going to do the same. So if I see a breakout here and the market carries on up, I'm going to raise this up to where I entered the market and put the stop loss here. If that market goes all the way up, to rise all the way up to 129.85 and towards that 130 level, I'll raise my stop loss to where I entered. One little thing I wanted to be aware of as well, the actual chance that I had on a 4 hour chart here, I'm just on below the DeMarca support. Now this DeMarca support, as you can see from the DeMarca training video, is solid support. This level here is solid support going forward. Okay, you might say, well, oh, it sold off down below that level a few days ago, but a few days ago on the daily chart and the 4 hour chart, mainly the 4 hour chart, this DeMarca, now a few days ago, now you may say, well, only 2 days ago this sold off down below that DeMarca. Well, two things. This level here wasn't exactly at this point, this DeMarca, because it does change every couple of days, especially on the 4 hour chart. But more than that, it did sell off, but immediately came back up, didn't it? And now, since the market came up from a few weeks ago and early January, went back off very briefly and came back up within 6 hours. So it just goes to show the sentiment in and around this 128 level. And this level here is very, very, very big support. This is an average level of good solid support, this 128, roughly 128 level DeMarca here. All right, so this has enabled me to get my stop loss just a little bit below that again. So if the market did come off and test this level and bounce back off, I'm still below this level, okay, at 127.85. So that's perfect. And if the market did break this level and sell off hundreds of pips lower, well, I've only lost that little bit there below here, about 15 pips, because I'm only 15 pips below that level. Okay, so it doesn't make a lot of difference. If it's to sell off a few hundred pips, I'm not going to lose those pips because my stop loss is here, there, spot on, solid, there. Stop loss under the DeMarca. All right, so bear that in mind. So I'm just going to then let that rally up. So very briefly then, risk percentage. Risk percentage on this trade. Now, I put a 0.75 lot on this. Okay, now 0.75 in volume terms. Yeah, let's, one sec, man, just go to history. Now 0.75 in terms of lottage, as we go with the risk calculator on pound dollar, 0.75 is indeed $7.50 per pip. All right, $7.50 per pip. Okay, that's C28 sell there to A28. We can see 0.75, and that's $7.50. And it's the same for euro dollar as well. So $7.50 in to pounds is 5.82. $7.50 in the calculator. As of this day, the current exchange rate then is £5.82, all bar a few pips, I imagine, all bar a few pence. So 5.82, £5.82. So for every pip that this goes up, it makes me £5.82. For every pip it loses me £5.82. Now I bought at 128.85, and the price is now to sell 129.06. So I'm over 21 pips up. Hence, I'm roughly 116 pips. So I'm 116 pounds in profit, pretty much. I've held this now. I've held this trade. Okay. So hence I'm 120 pounds up, pretty much. So it's like 20 times £5.32. So all bar a few pence, I'm that amount up. I've got some charges there that I've picked up for holding the trade, but that's pretty much it right there. So that's it. So now let's do the calculation. So 100 pips, if I was to lose $7.50 times 100, that's $750 is my maximum risk on this trade, because I've got a stop loss of 100 pips. If this market was to sell off 100 pips, which it could do, I sell off down here 100 pips, stop me out, I lose 100 pips. Minus 100, okay? So 100 times $7.50 in the market, 100 times $7.50 there is $750. I go to the currency converter. $750 will obviously be £582. So 501 now. It's just a little bit less now. It's moved. So £581. Now £581 on a 49,800 account are pretty much just over 1% in it. Pretty much. £581 on a 49,800 pound account. That's about 1.3%, just over 1.3. Okay, I'm not going to get a calculator up, but that's roughly 1.3% risk. And we can risk anything between 1 and 2%. Sometimes I go as high as 3.5%, but I'm a professional trader. But I have to have a very good reason to do that. But normally I do stick in between 1 and 2%. Okay, there's no reason whatsoever to go over that amount. And that is that basically. It was to trade 2 lots here and short this now and lose £100. If I was in for 2 lots at $20 a point and the market sold off against me 100 pips, I'd lose 100 times 20, which is 2,000. That would be $2,000. Here we are. Terrible luck, Matt. $2,000 I could lose. Now $2,000 on just under a $50,000 account, that's quite a bit.
So think of it like this, $2,000 around £1,600, that goes about 30 times into 49,000. So it's just about 3.4%.
So that's quite risky. That's too much. To lose $2,000 on a 49,800 pound account, that's too risky. And that's why the risk reward you need to keep low, because overall you build in the small profits, building them up nicely, you will gain over time. And it's about not giving back. The small profits build up. It's a bit like your piggy bank as a kid. You keep building bit by bit, week by week, paying into your pension week by week. It will add up over the long run. But The important thing is, in the boring times or the weeks that we don't get, or certain days we don't get a lot of activity, you don't give back. You keep building. You keep marching forward with those profits.